Good afternoon. Today I have an update for a company called IndoRama Synthetics India Limited. It's a textile company which has hit the upper circuit of 20% after reporting a 276 quarter-on-quarter increase in profit. Engaged in manufacturing and trading of synthetic yarns and textiles, is catering to the textile industry with a focus on quality synthetic fiber products across India. Market cap of 1210 crores, circuit of 46 rupees from the previous close of 38.63. Revenue from operations increased by 32% year on year. An increase of 12%, which is again from quarter 4 FY24 to quarter 4 FY25, so 12% increase there. Net profit has increased by 279% quarter on quarter. Capacity in IndoRama boasts a polyester manufacturing capacity of 670,000 tons per annum at its Butiburi, Nagpur facility, making it the largest single location polyester plant in India. The company also has a captive power generation capacity of 71 megawatts, ensuring energy self-sufficiency for its operation. IndoRama Synthetics India Limited, established in 1986 as a leading dedicated polyester manufacturer, the company produces polyester staple fiber, filament yarns, draw texturized yarns, and chips, serving industries like apparel, home textile, hygiene, automotive, and packaging. The company has subsidiaries of Indorama Yarns Private Limited, Indorama Ventures Yarns Private Limited, Indorama Sustainable Polymers India Limited, IndoRama Sustainable Polyester Yarns Private Limited. So, important disclaimer before we go through the financial results and some other information in the following slides. All information, opinion, and recommendations mentioned are of the respective experts and broking houses and rating agencies. These do not reflect personal opinion or view. Stock market investments carry inherent risk of financial loss. Investors must therefore exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decision. So the current price today is 45.87, which is almost 1.3% down today. Over the last 5 days, the stock is up 24.6%, which is a great achievement. Overall, in the last 1 month, a 27.7% rally, 18.8% positive in the last 6 months, then 7.5% overall value addition in the last 1 year. This is the logo of the company. High of 49.20 today. Today's low is 45.5. So after reaching 49, the stock has corrected again. 52-week high of 59.5 and 52-week low of 32. Ownership structure is missing the benchmark. The stock market's price justifies its current value. The company seems highly inefficient in case of asset management. The company may not be able to sustain adverse conditions. Market cap of 1207 crores, price to earnings of 60, which is pretty high for this company. Face value 10 rupees, price to book value 2.67, book value 17.3, cash of 19.5 crores, debt of 1000 crores, which is very high. Promoter holding is almost 75%. Earnings per share for the last 12 months 77 paise. Then sales growth of -5%, profit growth of -635%, return on equity of -28%. So I believe these financials maybe as of FY24. We'll look at the most current sequence in the next screen. valuations varying from 350 crores to an average of uh, 500 crores. Overall, Ganesha Ecosphere 4000 crore cap company. What is important is the return on equity and return on capital employed. So, Samarkshak Industries is probably the best return that it is giving. So, this is something that you should analyze and suggest in opinion from an expert advisor or broker, financial broker. Then incorporated in 1989, polyester yarn and fiber manufacturer, ISO 9001 2008 certification, book value 14, return on equity of 0.38% only. Company has low return on equity of minus 15 for the last 3 years, which is really very shocking. Company has low interest coverage ratio. Stock is trading at 3.31 times its value. Then you have comparison to Grasim Industries, Bombay Dyeing, Filtex India, then Century Anchor, Pashupati Acrylon, Vardhaman Acrylic. So you have small companies that you can look into as a comparison to IndoRama. You can see price to earnings ratio of 856, which means that the company is either a loss making company or the profit is very minor in comparison to the price of the stock. Then you can see over the last 2 quarters there has been a little bit of increase in the sales revenue. Net profit from a minus 44 crores in September jumped to a positive of 51 crores, which is a good sign in the last 2 quarters. However, the overall profitability for the year is 1 crore, and for the last 2 years, the company has been making a loss of almost 230 crores within the 2 years. Overall, it's a great improvement from minus 200 crores to a positive of 1 crore, which is going to be something that would rally the future of this company. Then you can see profit growth of 101% in the last 1 year, 12 months. Then return on equity is zero. Stock price addition of 9% this current year. Overall, seems to be an improving trend. Reserves have been steady. I think the reserves have lowered because of the loss that the company's made. Borrowings have increased from 900 crores 2 years ago to about 1,128 crores, which and overall the liabilities have increased as well. So something that really the company would need to take care of. We can't have very high borrowings which would raise the cost of interest that will be accumulated in their overall results. Debtor days 14, slightly better. Inventory days 65, which is still high or more or less consistent. Days payable has increased to 142 days, which suggests that the company is struggling to keep up payments to its suppliers and creditors. And year on year, this number is increasing. Then the cash conversion cycle has improved. Maybe the customer is receiving some advance uh, payment from its customers, which is the reason why the cash conversion cycle is at a minus, which is a good. Working capital days of minus 7 days, which again shows that the company is able to use the proceeds from its customers to run its operations, which is a positive sign again. Then you can see promoters of 75% holding, BII is 2.56%, public 23%. So public holding is still high, which could cause fluctuations in terms of price and volume as well. So something again, any sort of market negative sentiment in terms of financials or any problem or the adverse situations the company comes across, this is going to directly impact the share price, and it is going to put a strain on the volumes of the stock as well. So that is something that the company would have to keep in mind. So friends, thank you for watching. Please share this video with your friends, family and associates so they could benefit from it, and share your valuable comments in terms of improving the content and the presentation of the video. Thank you once again. Wish you a happy week ahead, and we'll connect with another video tomorrow. Thank you.